Bhartendu sir, may we start now or still we will wait another 2-3 minutes?
Better wait. Already 4-5 minutes gone. So
Hmm?
already 5 minutes gone. So you may start. People will join.
Okay. Hmm.
Good
So,
afternoon, sir.
sir,
Good afternoon.
you are going to start or may I?
You start. You start.
Okay. So, very good afternoon, all the participants. Our resource person already joined. So, this session is on recent development on sustainability reporting. It will be taken by Professor Ananda Mohan Pal from the University of Calcutta, and Professor Ananda Mohan Pal is a very senior professor. He had a teaching experience of approximately 40 years, and he don't need any introduction. Majority of the people in the field of business and management teaching, all of them, they knows Professor Pal. Professor Pal is also a practicing chartered accountant, and in this year, December only, sir is going to get retired. So now the session is transferred to Professor Pal. Sir, now it's your time. Please, you take it.
Thank you, Dr. Bidukanti Das. Thanks also to Professor B. Singh, coordinator of this program, for organizing this program and giving me this opportunity here to talk on some very important issues that I feel that this recent years, 2022, 23, 24, this just in these 3 years, so much developments have been made in the reporting, corporate reporting towards sustainability. Sustainability means sustainability of the planet, that is environment, of the society, that is people, so that people can live in a better condition, that environment is not very much damaged, so that the planet is capable of providing all the good quality of air, water, what are essential for our living. All these things are taken care of under sustainability. And for that sustainability, what the corporate entities are doing, they need to report that. And in this area particularly, it is an extension of the normal accounting or financial statements. It is non-financial statements or reports or disclosures that are very much necessary for people to know. And there are many developments. I would take up some of them one after another. So you see what is this IFRS Foundation. I would speak of this matter, IFRS Foundation, what it is. IFRS Foundation is a body which is of immense importance to all the countries in the world, because this is the body or authority which issues certain standards, certain framework, reporting framework and standards they are issuing, which are accepted by all of the countries of the world, all of the countries. And these are called International Accounting Standards or International Financial Reporting Standards. They issued these standards, and some countries are adopting them fully, some other countries are converging them. In our country, it has been converged. Converged means with certain deviations, certain minor deviations, 10% or 5% deviations. They have taken all the other requirements or other standards totally. In this way, this foundation is very important to our country also. and all other countries of the world. And what they have done, this IFRS Foundation consists of two standard setting bodies, boards, two standard setting boards, the International Accounting Standards Board and the International Sustainability Standards Board. Two boards are there. The Accounting Standards Board sets IFRS accounting standards. IFRS accounting standards, they are setting accounting standard boards. And the Sustainability Standards Board, they are issuing IFRS sustainability disclosure standards. International Sustainability Standards Board, they are setting IFRS sustainability disclosure standards. And both of them together, IASB, that is Accounting Standard Board, and ISSB, that is Sustainability Standards Boards. These two wings of the IFRS Foundation, they are jointly responsible for the another thing. It is called Integrated Reporting Framework. This Integrated Reporting Framework taken up by the IFRS, that is a very, very huge information for, or very important information for all of us. Why? Because this integrated reporting is something, which covers not only the financial part, but also all other stakeholders' direction. How it is taken, I am just telling you a bit, that integrated reporting is made for accountability and stewardship for the broad base of capitals. That is, broad base of capitals means not only financial capital, it includes further manufactured capital, intellectual capital, human capital, social and relationship capital, and natural capital. All these 6 capitals are considered or taken into consideration in the integrated reports or integrated reporting. And the framework is the guideline that how the integrated reporting would be made. This framework has been prepared earlier. It has been prepared 2012, and then again 2021. It has been revised by the another body which is called IIRC, International Integrated Reporting Committee. They developed it, and then they were changed to another foundation which is called Value Reporting Foundation. And this Value Reporting Foundation in 2022, they have merged with the IFRS Foundation. And thus, IFRS Foundation now holds the responsibility for the integrated reporting framework, which was originally developed by the International Integrated Reporting Committee. And that framework has been taken up by the IFRS Foundation. And why it is so important? Because once it is taken up by the IFRS Foundation, it is on the way to be followed by all of the countries of the world. For that reason, it is so much important. So when it has happened? It has happened in the year 2022, when integrated reporting framework used together with IFRS accounting and IFRS sustainability disclosure standards. That is, this framework is there, plus IFRS accounting standards, plus IFRS disclosure standards. All these 3 taken together can support a holistic view of the value creation process through governance and business model disclosure. That is, All this taken together would provide a holistic view of the value creation process of the business entities, and that would drive to connections between financial statements and sustainability related financial disclosure. How are they interrelated? That would be also shown. Then again, I am telling a bit about the integrated reporting framework. That integrated report integrated reporting framework together that has been stated. Okay. This integrated report, what are the purpose of an integrated report? What for this integrated reports are prepared? They are prepared to explain to providers of financial capital as it is now, in this format it is now. It will be further developed, but still in what way it is now, that I am stating that. To explain to providers of financial capital how an organization creates, preserves, or erodes value over time. That is, organization through their activities may be able to create values, may be able to preserve value, or it may fail or erodes value over time. The entire picture would be provided by the integrated reports. To enhance accountability and stewardship for all the capitals of a company, uses or effects, that is, what type of capital they are using or what type of capital they are affecting. Financial capital, manufactured, intellectual, human, social and relationship, and natural. So if by the business activities natural capital is deteriorated, that accountability would be revealed by this integrated report. That may not be revealed by the financial statements, say profit and loss and balance sheets, because that kind of information are not reported in the financial statements. But in this integrated report, what harm is done to the environment or to the water bodies of the planet, that can be measured and shown, reported in integrated reporting. Then, to support integrated thinking, decision making, and actions that focus on the creation of value over the short, medium, and long term. That is, it is not only 1 year or 2 years they are considering medium and long term also over short term. Then it has been accepted by the IFRS Foundation that although the primary users of integrated reports are the providers of financial capital, integrated report benefits all stakeholders interested in an organization ability to create value over time, including employees, customers, suppliers, business partners, local communities, legislators, regulators, and policymakers. All these are stated in the framework. These things are stated in the framework. And in the framework, 7 guiding principles are mentioned. 7. What I am in this lecture, I wanted to give a brief exposure to this integrated reporting framework. And so, after this introduction, I am also providing you that what are the contents of that framework. There are 7 guiding principles. In very short, in brief, I am explaining them. The IR framework specifies 7 guiding principles for preparation and presentation of an integrated report. What are they? Number 1, it should have strategic focus and future orientation with respect to value creation and use and effects of capitals. So mind, that what should be the quality expected in the integrated reports. That framework mentions them, that it should have strategic focus and future orientation with respect to value creation and use and effects on capital, use of and effects on capitals. Which capitals? Those 6 capitals that includes, as I mentioned earlier, that includes what are they? These 6 capitals are very important for considering all the stakeholders of any business. Who are they? They are not only financial capital, which we think or we consider nowadays. Beyond that, manufactured capital, intellectual capital, human capital, social and relationship capital, and natural capital. So all these capitals, what would be the use of and effects on capitals on this item, on these issues? There should be strategic focus and future orientation. Number 2, it should have connectivity of information. Connectivity, that is financial and non-financial, whatever information will be provided, they should be interlinked, that one can connect with the other. Number 3, it should provide insight of the organization's relationship with key stakeholders. Now, key stakeholders are the providers of financial capital, we know, providers of capital, the providers of the fund, who are providers of debt capital, then employees, customers, government, all of them are the stakeholders. Now, number 4, it should consider materiality by disclosing information substantively affecting value creation. So the purpose of all the entities, corporate entities, now it is concerned here that they should create values. So far in the financial accounting, we understand that they should create surpluses, profits, maximize the shareholders' value. Now, in integrated reports, it is far wider objects, that they should create values for all the capital holders, all the stakeholders. So materiality is there, one principle. Then the 5th principle is very short. It should be concise. Concise, that is brief. It should not be very much elaborated. Number 6, it should provide reliable and complete information. 7, it should be consistent over time and comparable with other organizations. Integrated reports should not only be consistent over time, they should be also comparable with other organizations. After that, 7 guiding principles, there are 8 content elements. What are the contents of this report? Number 1 is organizational overview and external environment. That means it would give answer to the question that what does the organization do and what are the circumstances under which it operates. That is external environment, and what does the organization do. That overview should be presented in the integrated reports. And framework sets the guideline for preparing integrated reports. These are the guidelines, are 7 guiding principles are mentioned, and what are the contents that is now we are discussing. Number 1, I have stated already. Number 2, governance. That is, how does the organization's governance structure support its ability to create value in the short, medium, and long run. Next, see business model. That is, in integrated report, you have to state what is the organization's business model? What is the type of the business that the organization runs? Number 4, risk and opportunities. Where are the specific risks and opportunities that affect the organization's ability to create value over short, medium, and long term, and how is the organization dealing with them? So the risk and opportunity, both aspects should be carefully noted. Number 5, strategy and resource allocation. That is, where does the organization want to go and how does it intend to get there? That is their strategy and resource allocation element. Next, performance. To what extent has the organization achieved its strategic objectives for the period, and what are its outcomes in terms of effects on the capital? That is, as a result, capital increases or capital decayed, deteriorated. That should be revealed in that integrated report. 7th element is outlook. That is, what challenges and uncertainties in the organization likely to encounter in pursuing its strategy, and what are the potential implications of its business model and future performance. That is, in the outlook, the contents of in the integrated report, the challenges and uncertainties that the organization is likely to encounter in its way of doing business, that should be stated. The last element, 8, is basis of preparation and presentation. That is, how does the organization determine what matters to include in the integrated report, and how are such matters quantified or evaluated? So, the first part of my talk is on the integrated reporting framework with respect to IFRS Foundation. It is actually in the responsibility of IFRS Foundation. Under IFRS Foundation, this integrated reporting framework has been now accepted and to be followed by all the countries of the world. Then the next part of the IFRS Foundation, what I have stated, that sustainability standards, they have already started issuing sustainability standards. Hello? Anything? I could not hear you.
Nothing,
Am I
sir. You may
audible?
continue, sir.
Okay. Sustainability standards. IFRS has already issued 2 sustainability standards effective from 1st January 2024. Why I am stating that these are new and these are not even in any books or like that. So one is the IFRS S1, Standard 1, which is general requirements for disclosure of sustainability related financial information. Sustainability related financial information. Objective of the standard is to require an entity or company to disclose information about its sustainability related risks and opportunities that is useful to primary users of general purpose financial reports. So they have stated that what is the objective of the standard 1? Objective of the standard 1 is to require an entity to disclose information about its sustainability related risks and opportunities. that is useful to the primary users. Who are the primary users? They are the investors, that is provider of share capital, provider of loan capital, creditors. These are the primary users. Only these three: creditors, providers of loan capital, and first and foremost is provider of equity capital. Information about sustainability related risks and opportunities is useful to primary users because an entity's ability to generate cash flows over the short, medium, and long term is inextricably linked to the interaction between the entity and its shareholders, and also with society, the economy, and the natural environment throughout the entity's value chain. Then IFRS S2, IFRS Standard 2, which is focused on climate-related disclosures. Climate-related disclosures, Standard 2, its objective is to require an entity to disclose information about the climate-related risks and opportunities. That is useful to primary users of general purpose financial reports that could reasonably be expected to affect the entity's prospects, the entity's cash flows, its access to finance or cost of capital over the short, medium, or long run. So you see, already from 1st January 2024, 2 sustainability standards have been issued by the IFRS, although under convergence, India has not yet taken up them. They would take some time further to take up them. But in the course of time, all the IFRS Foundation issued standards, framework, etc., whatever in sustainability part, in the IR part, or in the pure financial reporting part, all of them would be either converged or totally adopted by other countries, including India. In India, the authority for this was one institute, Institute of Chartered Accountants of India. So what they have done so far on sustainability, I am now focusing on it. Institute of Chartered Accountants of India issues compendium of social audit standards. It is not reporting, it is audit standards. I include it because it is on sustainability. Social audit standards. The Sustainability Reporting Standards Board of the ICAI, that is Institute of Chartered Accountants of India, developed 16 social audit standards on each of these thematic areas, that is from SAS 100 to SAS 1600. What are the thematic areas I am just mentioning? Is it there? Thematic areas are there. So you can see them also. Thematic areas are eradicating hunger, poverty, malnutrition, and inequality, promoting healthcare, including mental health care, sanitation, and making available safe drinking water, promoting education, employability, and livelihoods, promoting gender equality, empowerment of women, and LGBTQIA plus communities. That is one term. We are not skipping that. Ensuring environmental sustainability, addressing climate change, including mitigation and adaptation, forest and wildlife conservation, etc. These are the. Then Indian Institute of Chartered Accountants of India have done another development, but I would come to that after going through this corporate reporting of ESG initiatives. I would focusing on that because on ESG initiatives, SEBI, that is Security and Exchange Board of India, one authoritative body, authority in Indian context, SEBI, they have done something. What is ESG? ESG is environment, society, and governance. Environment, that is planet; society, that is people; governance, that is the corporate management. styles. So ESG is a term to mean, in other expression, it was triple bottom line: profit, people, planet. That is, all the stakeholders are considered in ESG term. And corporate reporting on ESG, SEBI has initiated many things. From 2012, SEBI made business responsibility report of ESG initiatives mandatory for top 100 companies based on market capitalization. Market capitalization means share price into number of shares. The total value is called market capitalization. So in India, there are almost over 7,000 companies. Of them listed in the stock exchanges. Of them, top 100 based on market capitalization, to these top 100 companies, this reports, business responsibility reports, has been made mandatory. Then it has been progressing over time. I am not going all of them. It continued till financial year 21-22, mandatory for not 100, for top 1,000 companies. That is, extension has been made from 100 to 1,000. Then from 22-23, what happened? Companies are required to submit a new report, which is called Business Responsibility and Sustainability Report. That is, sustainability term has been included mandatorily for all those top 1,000 companies. And for other companies, these kind of reports are voluntary. They may show, they may not. In the BRSR, in that report, there are 3 parts, A, B, and C. The C part is important to us, for this sustainability parts are covered in the C part. Performance on sustainability issues are covered in C part. ESG issues. Companies are required to demonstrate their ESG initiatives in that BRSR. And they would provide information under 2 categories: essential indicators category and leadership category. That essential indicators category is mandatory and leadership category is optional. That is another development. As you see, I have told you that it is done 22-23, that new report has come by SEBI. And in this respect, Chartered Institute of India has done something new, which is almost unknown to many of us, even by the chartered accountants also. Not aware of this, that ICAI released sustainability reporting maturity model. The Sustainability Reporting Standards Board of the ICAI released Sustainability Reporting Maturity Model, SRMM, version 1 in March 21 for making business responsibility report data quantitative by introducing scoring mechanism. For each item, certain score would be provided, has been provided by the ICAI, this model. And version 1, based on what? Based on business responsibility report. And then within some years, in the next year or on the same year, what has happened, that BRSR, that is Business Responsibility and Sustainability Report, has come out. And for that, they have again revised their model, and it is now named that BRR is replaced by BRSR, and ICAI also updated their sustainability reporting maturity model 23 based on BRSR. is a total of 300 score points. Total points 300. By completing the scoring of all three sections, that is A, B, and C, and 9 principles of SEBI BRS, 9 principles are there in C part. An entity will be able to assess its position and maturity level in sustainability reporting. What is their maturity level? To what extent they are advanced in sustainability reporting? By scoring in this model, that would be determined. How? BRSR score, percentage of grand total score. Total score is 300. And what would be their score? That would be converted into percentage. If that is up to 25%, that is the total score is below 75. Out of 375 means up to 75. 75 means 25%. Then it will be called that company is at formative stage, at the beginning stage. Level 2, 25% to 50%. That is, if the score is more than 75 and up to 150, then they are at emerging state, level 2. There is level 2. In that way, level 3 would be greater than 50%, up to 75%. That is more than 150, up to 225. And if their score is more than 225, that is greater than 75%, then they are leading by example, level 4. I would not show you in detail, but show you some items of this maturity model, how the scores are measured or recorded. That section A, I have told you that section A of the BRSR, Business Responsibility and Sustainability Report section, is general disclosure. On general disclosures, the total point is 18. I have not given the details of that. Section B, management and process disclosure. That is the second part of the report. Their total is 24 for this part. And total of section A and B is 42. Section C is principal-wise performance disclosure. In principal-wise performance disclosure, I am going to a bit detail. More than 1 or 2 examples I am showing. Suppose I have taken principle 1. There are 9 principles. I have taken principle 1 only to show you some score under that. Business should conduct and govern themselves with integrity in a manner that is ethical, transparent, and accountable. It is the principle 1. Under that, what type of measurement should be done? Here, number of training and awareness programs held in any or all the principles. On these principles, whether any training and awareness programs have been held. 3, if held for directors, key managerial personnel, employees, and others. Then you get 3. You will get 2 if for any of 2 categories, that is directors, key managerial personnel, and employees, and others. These are the 3. Out of that, only for 2 categories you have made this program. Then you will get 2. 1 if for only 1 category, 0 for none. That is, if you do not hold any training, then you will get no score. 0 would be score. So maximum 3. Another is percentage coverage by awareness program conducted on the principles. 5 if coverage greater than 90%. That is, if your awareness program, you can include more than 90% of your employees, then you will get 5. In that way, 4 if the coverage is 80 to 90%. In that way, scoring has been advised by the ICAI to be followed by the companies. Another, principle 3. Principle 3 is business should conduct and govern themselves. No, it is business should respect screen sharing. It is in regard the what what I can, in the employees part. The employees part are covered here in principle 3. So here you see percentage covered under health insurance. If you find 75% employees, greater than 75% employees, are covered under health insurance, you get 2. Percentage covered by accident insurance, greater than 75% employees, you get 2. Percentage of employees covered by maturity benefits, here also. In that way, you find the how quantitative measurements are done. Whenever you make quantitative measurements, put down score, then it cannot be just avoided. The companies have to provide quantitative information which can be objectively assessed by others. Others may know to what extent the sustainability reporting has been made. By the scores, they would know. This BRSR core, SEBI introduced the BRSR core June 14, 2023. And it is also for top 1,000 companies, but they have allowed time. In 23-24, only top 150. For 24-25, top 250. In 25-26, top 500. And in 26-27, top 1,000 listed entities need to provide all these BRSR score elements. This BRSR core is okay. I have to say something. Whatever this maturity model by the institute has been developed, that is on BRSR, that is on Business Responsibility and Sustainability Report. BRSR core is another development which have been made in 2023. So you see, one after another, there are so many developments have been made. This BRSR core is a subset of BRSR. It is another part of the, not another part, one subset of BRSR, which focuses, I would see that which focuses also on key performance indicators. That is, they developed key performance indicators that can be measured for that 9 ESG attributes. And for this BRSR core, the time is top 150 listed companies. It is in 23-24. And top 1,000 companies would be under this BRSR core responsibility obligation. That time is 26-27. At this stage, I need to see what time is left. We have time up to 3. Okay. So we have time. This is the more or less the last part of the development. And ESG attributes. 9 ESG attributes. Greenhouse gas footprint. It is number 1 ESG attribute that has been covered under BRSR core, and BRSR core has key performance indicators metrics. Key performance indicators means in what way you would be measuring it. Direct emissions. If your company makes any direct emissions, that is for your production, when you are producing, you are making certain emissions, it will be measured in CO2 equivalent in metric tons. Unit is CO2 equivalent. CO2 means carbon dioxide equivalent. Equivalent means there are many other greenhouse gases, methane, 7 gases. So I am not telling all of them, but all of them are converted only on carbon dioxide equivalent. And then they are measured in metric tons. Suppose there are imaginary number, arbitrarily I have put. Suppose in the financial year, it was 20,100 metric tons direct emission. In another previous year, it was 20,500. In this way, you have to put the numbers under BRSR code. And indirect emissions. Indirect emissions are when you purchase some items from others, those items which you are using in your process, those items also, when produced by others, those items also had made certain emissions. Those emissions are to you indirect emissions. That is, you are not directly making emissions, but you are consuming or you are purchasing or you are using certain materials which are produced before by certain emissions also occurred at the time of their production. So that is also taken to be here considered. That is called indirect emission. Then number 3, intensity. Emission intensity. It is emission divided by revenue. How it will be measured? It is stated, given here. Total emission intensity in terms of physical output. That is emissions divided by output. That is output in units. Per unit, what is the total emission? That is also one expression, and that has to be recorded in this way. It is just, I am showing you for as an example that how it would be shown, so that whenever whoever would read it, they can know exactly what is the emission made. We cannot just say that we have controlled our emission without giving any number. Then nobody would understand whether they have controlled or they have reduced or not. But if this is the picture, then you understand that previous year it was 20,500, now 20,100, it is reduced. Previous year it was 3,500 to this year it is 2,900, it is reduced. So whether improvement has been made, to what extent, that everything can be understood if the quantitative measurements are given. Water footprint, that is also number 2. In kiloliter, million liter, rupee adjusted for PPP, total water consumption, you have to record that. Water consumption intensity. Intensity means rupee adjusted for, here, what kiloliter is your consumption, divided by rupee adjusted for purchasing power parity. Purchasing power parity is the, actually in terms of dollar, they would measure it so that it may be comparable worldwide. Then water discharged by destination and levels of treatment. Another information that is also in what unit you will be measuring, in that way it is shown. Okay. It is regarding energy footprint. Energy footprint, energy consumed in joules or multiples, energy consumed from renewable resources, energy intensity based on rupees, based on product, in that way. Waste management. Waste management, you see, plastic waste, e-waste, everything either kg or metric ton you have to show. Biomedical waste, construction and demolition waste, battery waste, radioactive waste, other hazardous waste, other non-hazardous waste, total of them, then waste intensity, etc. It is 4th. Employee well-being. That is employee well-being and safety cost incurred as a total percentage of total revenue. that you have to state. Lost time injury frequency rate, total number of lost time injuries. That is for injuries, what time is lost. That should be multiplied by this number and then total divided by total working numbers. In that way, the unit would be what unit you would be taking. In this case, it is percentage. In this case, it is this fraction. Gender diversity. Here, gross wages paid to females as percentage of total wages. Complaints of POSH, that is certain harassment issues as percentage of female employees divided by total number of workers. In this way, the percentage you have to show. Then inclusive development. That is, if you purchase from micro, small and medium enterprises, from small producers, and from within India, what purchases that constitute as a percentage of total purchase, that you have to record here. Then wages paid to persons employed in smaller towns, permanent or non-permanent or on contract, as a percentage of total wages. So that is also inclusive for inclusive development measure in percentage, it would be shown. Fairness in engaging customers and suppliers. Here also one such instances involving loss, breach of data, etc. Some measurements is there given in percentage we have to express. Last one is also openness of business. Openness of business means purchases from trading houses, sales to dealer distributors, etc. You have to take and show in percentage. So in that way, what we find that in the recent years, there is so many changes in production. In the last 40 years, I have not seen such one after another changes. So here in the recent, and for this, all these things are totally new. Only in the certain literature, these are available. And this was my presentation. My intention to discuss this issue with you. I think you listen to it and you have got some idea of this recent developments. This PPT I will be transferring to the Mizoram University, and if anybody interested, they may consult this, search this, and develop the new areas of your research work, and also for the education for your students. You are all teachers, for your students also. You can give some brief idea about all these things. Thank you. We are a bit before time, but it is okay. I think if any.
Thank you, sir, for your very nice presentation. And sir, our MMTC center will contact you for other formalities, sir. Here, the participant, if you have any question, you may put it in chat box and we will put it to sir. Sir, there is one question, sir.
Yes.
Sir, how SEBI's new BRSR code 2023 combating the issue of greenwashing?
What he actually wanted to know.
That is some
buzzwords. Let combating the issue of greenwashing. It is, you see, all these 9 stages, BRSR core has already developed certain metrics. In that way, if you give some quantitative information, you cannot escape that. If you find that you are not doing well, you are really in the process of greenwashing, reducing all the environmental, uh, creating more footprints, higher footprints, that would be revealed. If that is revealed, clearly revealed, then it would attract all the attention of the authorities that it should be controlled. When something is not revealed, then it creates more harm. If you can maintain the transparency, and so far this BRSR code is something which has added some features in the reporting. What features? These are all quantitative measures. You have to put quantities or amounts there. As they are measurable, you cannot say in normal way that suppose here, in all the companies, they're all claiming that, okay, unemployment is a big problem. We are taking care of that. If you go to see what is the number of employees, whether they are declining or increasing, you won't get any information. But in this BRSR code, there is on employee information, all the information. Before this, there was no such information available for each company. You may go through the company's reports, annual reports, you won't find the number of employees. But they are claiming that we are always doing something for reducing the unemployment problem. And they may claim that, but if the numbers are shown, then they cannot claim that easily. If the numbers are shown that last year the employees number was 10,000, this year it is 8,000, they may not claim that we are taking care of employment. So the companies actually, I found for different research work, I found that the number of employees information is not there. And now in BRSR code, you have to give that information. In that way, it would give more strength to the controlling issues that you can control. If you know, you can control. So I think I have answered this question. If any other
participants are encouraged to ask question. Okay, so you may put question either in question answer section or in chat box. Okay, anyone may serve the purpose. Chat box, till now there is no question. Sir, please wait another 5 minutes. Okay, if there is any question, we will put it to you.
Okay.
Because sometimes participant, they need some time for writing also.
Yes, yes. We have enough time.
Yes, we have enough time. So is there any other question?
Will ESG helps
Yes, sir.
to attain or maintain triple bottom line? Yes. Triple bottom line means, what is the bottom line? What is the meaning of bottom line? The last line of the income statement is profit. So profit is the bottom line. In that way, another bottom line is planet. At least what would happen to the planet? You know that biocapacity and ecological footprint, these two things are very much important in triple bottom line. That when you consider the triple bottom line planet, we are considering that what is the ecological footprint total and what is the biocapacity. Ecological footprint means what capacity is actually consumed for your production and consumption, whatever. And it shows that what is the biocapacity of the world, planet. Its consumption is 170% of that overall global consumption. That is ecological footprint. That is, they are damaged, they are used 170%. As a result, what would happen? The overall strength, sustainability of the planet would be declining because it is consuming or damaging more that it can sustain. That is on planet. And people, that is employees, customers, all the people. Three bottom lines. And ESG, go through the principles, all the ESG items. What are the ESG items? You find all of them are there, included there. So this triple bottom line covered in three P's, three P, people, planet, and profit. Whereas ESG principles, they are 9 parameters. In 9 parameters, they are distributed. But those triple bottom line is covered in ESG. Okay? You can compare that. You can take triple bottom line, and I can give you one elementary source because I had written that. You can get that. That is in the study material of Cost Institute final. In that corporate financial reporting, all these items are there. All this triple bottom line, ESG, etc., everything in one chapter, one big chapter. And this is available to all. Anybody can see that. So you can see that chapter, and there, as it is written by me, I can remember it, that what are the contents. So you can get everything about that. All the things, BRSR core, triple bottom line, 4 P's, new items is 4 P's. 4th P is included, another 4th P model, that is purpose, profit, planet, people, and purpose. That is also included there. So all the latest developments are included there. But up to 23 I had done. So after that, this 24, whatever development, that is sustainability reports, this framework is a very important thing. Framework is the basis, logical basis or theory part of the entire standards. So this framework 2024, what sustainable standards have been issued, those things are totally new. And it is stated here, not in the books you would find, not in my what is called, their institutes, study materials also, they are not included. Okay, any other question if you have?
There is another question in chat box, that what are the recent trends and development in GHG?
Greenhouse gas.
Hopefully this greenhouse gas.
Greenhouse gas, GHG. Trends and developments in greenhouse gas. As the trend is rising, greenhouse gas is rising. They are told to control it. They did control it up to 2012. After that, no control. Only big meetings, Paris Agreement, and after that, so many agreements are there, developed every year. UNFCCC. If you search UNFCCC, you will get the entire history of the Greenhouse Gas Commission. What are the developments? Right from the 1997 Kyoto Protocol. Kyoto Protocol is one treaty, international treaty, that was so unique to me. That is the only treaty where you find the developing countries have been given certain benefits. And that benefit has been stopped after 2012. And so the entire scheme, Kyoto Protocol scheme, has been cancelled. By whom? By only one country, USA. They didn't ratify the protocol, and they did all the things to cancel that protocol, because in that protocol it was stated that the developing countries need not control any emission, because they are at the developing stage. They need to produce something, and for that they won't be able to control. Only the developed nations would be controlling, and if they fail to control, they would give penalty, huge penalty. Up to 2012, this happened. After that, it is cancelled. 2012 to 2020, there was that scheme, Kyoto Protocol scheme for 2012 to 2020, that has been cancelled. And no new development, whatever development, that has not reached anywhere. There is no reduction till now. Okay. Regarding greenhouse gas. So that would take another big paper to detail, to give you the details. But only thing I have mentioned that up to 2012 it was very good. After that it has been declining. Thank you. Thank you all for. No more
Sir,
questions are there.
another question written, okay, that is Madhavan essay, that are sustainable practices in align with balanced scorecard?
No. Balanced scorecard has not taken the sustainability issues there. There are 4 components of balanced scorecard that doesn't include sustainability. Sustainability part is not taken care of in balanced scorecard. It was totally financial based, and marketing, HR, these management parts are there also. Governance parts are there also, but not planet and people at large, or the society, or the community.
So is there any other question by any participant? We will wait another 1 minute.
So only one thing, as I have this, I know someone are doing research. I find many researchers, their awareness of CSR. You won't say awareness of CSR, you rather say awareness about ESG. That would be better, because CSR is something which is defined by the Companies Act, and which is only necessary for those companies specified by the Act requirement. So others need not be aware of CSR. CSR is something just company has to contribute 2% of their profit, etc., specified company. So everybody need not be aware about CSR, but everybody need to be aware about the ESG or sustainability issues. So whenever you pick up any title of your research work, I have found that many research are going on awareness, based on awareness of CSR. Avoid that. That shows that you do not know what is CSR, and rather you also do not know what is ESG. So better take care of those. Nobody has asked such questions here. That from my experience, I am just telling you, using this time. That's all.
Sir, one more question is there in chat box section. That is, what are the most significant trends in sustainability reporting over the past few years?
What are the most significant trends in
Sustainability reporting over the past few years?
Significant trends. What I had shown you, that is the sustainability reporting overall development. What are the changes in sustainability reporting? What developments are made? That has been done. That has been shown to you. But your question actually is how the companies are reacting to that. That would take some time, because these recent developments, some research work has to be done, that to what extent the companies are following that, to what extent they are complying with that. That data is not with me at this moment. So from that angle, I cannot say that what is the trend, actual trend. But the overall trend, I can say that there is hope that we are really taking all the stakeholders into our consideration, and we are revealing them There may be escape from all this provision by hook and by crook, by very all the defaulters. That may happen, but still there is a trend that you can see that. Suppose in CSR, what amount of expenditure on a health, on education, you can find that in the website, in the government website. Okay, from that you would be getting some information that overall super CSR expenditure, I know the health and education, these are the foremost sectors where all the expenditures were made, highest expenditures were made. All others are far, far less. On health and education, most of the expenditure has been made by the companies under CSR scheme. That is one good news. So it can show certain trend.